Excellent. Well, welcome today to another episode of the InsureTech Leadership Podcast. I'm Josh Hollander of Horton International, and I'm pleased today to be here with Michael Nadel. He is partner and head of the global insurance practice at Simon-Kucher. Welcome, Michael.
Josh, thanks for having me again.
Yeah, absolutely. So I don't know, between this and the ITA webinars, I don't know how many times we've been on together, but it's good to have you back and kind of at least get a yearly kind of update on where you see things headed and see things today. So maybe just for those who don't know, haven't heard our past episodes, maybe you can just give a quick bio for folks and we can go from there.
Yeah, absolutely. I'm a partner at a firm called Simon-Kucher Partners. Josh, as you mentioned, we're a global strategy consultancy, really famous for growth-related topics. Anything that enables a business to grow, both carriers, brokers, agents, InsureTech, software providers. And one of the things that our firm is really famous for is pricing strategy. And I think there's a lot of interesting things at the moment on all things growth related, but a lot of things around pricing at the moment as it relates to AI and a lot of changes that we're seeing in the market. Come from the industry prior to this role, so was at CNA in the strategy and innovation arm of the business, and then previous to that was doing large scale financial services, implementation, change management type of work at Accenture.
Yeah, so great. So I think last year we talked a bit about how the early AI movers were going to monetize what they built. And now maybe it's more of a defensive mindset versus an offensive mindset. So maybe you could just dig into a little bit about sort of, the first conversation you had this year, maybe some trigger that made you realize that things had moved a bit.
Yeah, so I wouldn't say that we're fully in defensive mode, but I would say if you take a step back from a year ago, what people were reaching out to us about at Simon-Kucher was basically, I've developed this new AI feature. How should I charge for it? How do I, put it into my package or my suite of services? Do I give it away? Do I put it into my best offering? Do I sell it as an add-on? And there was a lot of sort of momentum and urgency around these new innovations that were coming out. Now, what we've started to hear more about in the last, I would say, 6 months or so is more conversations that have been triggered by advancements of some of the LLMs or other areas where people are, as you put it rightly, coming to this from a defensive perspective. I'm now thinking about the way that AI is going to impact my core business, my core offering, the product or the services that I sell. How should I think about monetizing those services? And we see this taking shape in kind of a couple of different ways, right? So there are truly, the areas of business that are fundamentally challenged by AI, meaning I built something previously that now is more easily recreated with AI, LLMs, vibe coding as they call it. And there's a systemic risk of the core business as a part of that. There's also folks that now are able to sort of extract value from their product, but now in different ways. Historically, maybe you needed a desktop application or a mobile website to engage with my service or offering. And actually, it's easier for you to engage with me through an LLM or through some different mechanism. So it's not that value has been lost, but the way that people consume it is starting to change. And then there's the other angle of this where the value that's received is still the same, but the way that I charge for it no longer makes sense for me going forward. So a big example of this at the moment is core software businesses based off of per user models. Many of them are really looking at that very heavily and head on, and saying, well, if my customer automates away the users on the other side of this equation, they're still getting benefit out of my finance application or whatever it is. And I need to change the way that I charge for what I'm selling to make sure that I have a sustainable business model.
So let me ask you a quick side question on that. So obviously the stock markets have been roiled a bit by questions as to whether SaaS software businesses are going to be able to continue, regardless of how they price, are going to be able to continue to generate the same revenue and margins and those sort of things, and get viable coded away or personalized software away. I was having a conversation with someone else recently, and they were kind of arguing that if any industry, it's less likely for that to happen, or it's going to take more time than it to happen, it's going to be insurance. Would you agree, or do you think this is something that's already started happening, not just more broadly, but specifically in this industry?
So I love the insurance industry, and I think everyone that's listening to this won't be shocked by saying, like, we're not the fastest industry to always innovate, right? So from the pure sense of saying maybe we move slower than other industries, sure, maybe there's a little bit more time in some areas than others, but I think you'll see the same set of trends in other industries to a degree that you will within insurance, which is if you have an application that doesn't sort of drive additional value beyond streamlining a commoditized workflow or doing something that essentially isn't bespoke or creating unique value, you are at a core risk of being disintermediated. Now, I'm not saying that's going to happen overnight. I think many businesses are very excited about the potential that AI can bring from a development standpoint. And it's leading in some cases to overconfidence of firms that used to have a primarily buy strategy that now all of a sudden think that they can just be a build shop. And there's so many reasons why software exists other than just what it does. In many cases, it already checks a regulatory box that is vetted. It does a lot of governance and audit functions. Like, there's all sorts of capabilities that come with software other than the thing that you see that it does on the front end. Security, another sort of major element of software. And so I think people are really jazzed at the moment about the idea of, quote unquote, vibe coding applications, but the truly heartbeat systems, the big investments, like from an investment standpoint, might be on the attention of CIOs, but I don't see them as being the first to be at risk of disintermediation. Again, when it's providing some sort of truly unique, and in this context, insurance specific value add beyond, like a scheduling software or something that in theory you could relatively more easily recreate.
So I know last year you were talking a lot about sort of previewing for people, or giving some insights into people on how you think about pricing strategy, and depending on the business model where people may leave money on the table. So have you seen some examples, or are there maybe like a top one or two mistakes that you've seen some of the companies with newer AI solutions making, and how they think about pricing?
Yeah, so there's two that come sort of immediately to mind. The first one ties back to general pricing strategy, which is you need to understand what you're building and what people value in it before you prescribe a price to it. Sounds very intuitive, but very often what happens is people build something because they think it's a great idea. They bring it to market, and then they prescribe a price to it and try and figure out why people are or are not buying said product. And at that point, it's really, really hard to figure out why. So our general methodology always says to start with essentially what people are willing to pay before you bring it to market. Now, there's been a number of examples of this on the AI front. Some tongue-in-cheek, I think, publicly. But if you think about even the initial OpenAI pricing as an example, Sam Altman's got a famous tweet on this where he threw out a fixed price. I forget exactly what the original price was, and there was a question of why he charged that amount, and he said, well, it felt good. Now, the thing that he misunderstood at the time, and then OpenAI had to significantly increase their prices, was they didn't expect people to say thank you over and over again into the LLMs. And the cost of that, was dramatic. And so it's not only with these AI innovations, understanding what people are willing to pay, but a true understanding of your cost to compute on some of this. And if you get that wrong, you can sign yourself up for loss leading contracts for a long period of time ultimately.
Yeah.
The second I would say is jumping towards models that are likely where the market is going, but that you're not really ready to sort of enable. And we talk about those a lot in the context of AI of being outcome-based pricing models. So meaning I pay only when the AI achieves a specific outcome. It's a chatbot selling insurance policies. I only pay when it actually binds a policy, as a really simple example. And again, buyers love this from an idea standpoint because it's the ultimate sort of ROI mechanism. The software only adds value when I get value added, and we have a really nice value exchange. The challenge that we've seen with some folks that are trying to jump too quickly to this is, how do you actually define that outcome? In the case of a bindable policy, if I issued the policy, but the customer, canceled the policy within the first 3 weeks, should you still pay for that? They never made the initial payment. What constitutes the outcome in this case? And or misrepresenting the probability of you driving that outcome, and therefore not getting paid at the consistency that you expected when you modeled it out. There's a lot of sort of belief that outcome-based pricing is where the market will start to head around many of these AI innovations, and that's probably right to a lot of degrees. But there's a lot of reasons to be very sort of hesitant and stepwise towards heading to that versus jumping in with both feet.
It's probably some element also, I'm guessing, of, even if you're providing a better solution, how much of that outcome are you actually controlling versus is still dependent on others, right?
Yeah, of course. And in addition to that, you have to sort of, to your point, know the place that you play within the ecosystem. And if you're going to drive an outcome-based model, in some cases, it could be used as a way to try and replace the value of other solutions as well. If you previously had a solution that did one thing and you want to vertically move upstream to capture more of that workflow, an outcome-based model can be a way from a competitive standpoint to push a competitor out and expand your footprint.
Yeah. So I think you and I have chatted a bit about the fact that a lot of the carrier AI spend at the moment looks a bit like RPA spend from a few years back in new packaging. And, in your mind, what separates the carriers running a well thought out AI program from the ones who are just kind of hopping on out of, FOMO or, some other motivation that maybe isn't particularly well baked?
What makes one solution better than the other?
No, what makes for a better thought out strategy from a carrier point of view?
Got it. Yeah.
AI.
So I think you're right in some cases. With the boom of AI, I've started to hear again many topics that, from a technology standpoint, when I was back in my carrier days, we were talking about back then. So OCR and document ingestion and the workflows around that. I mean, 2018, 2020, at the time, we are consistently looking for solutions that could ingest unstructured documents from specialty insurance lines and straight through get the documents extracted and routed to the right place. And RPA was one of the solutions for a lot of that. And there was no perfect mousetrap at the time. And fast forward to 2026, I now hear a lot of people talking about, that same problem again in relation to their AI solutions. And so in some cases, RPA and what we're talking about now in AI, like the AI that we're talking about is just really smart RPA. And so maybe it can solve some of those problems better. But at the core of it, if you're a carrier making wise decisions here, it's really about the ones that are thinking about the economics associated to the workflows, not just the technology and where you can deploy it. So like the folks that are really thinking about which workflows actually create value and are trying to solve for those are the ones that are ultimately going to get kind of the biggest bang for their buck. Like if I had to allocate sort of spend as a carrier as a percentage of budget, I'd be looking to automate 70% of those sort of high value workflows and apply AI to those, probably 20% on things around data and governance. And the last 10% would be truly exploratory. Like, hey, we know we've had this issue for years and years. What innovative way could we try and solve this or net new solve brand new problems?
And what do you think about, and maybe you've already answered it with your percentages there, but things that sort of are operational improvements versus things that can be truly transformative?
Yeah, I mean, I think the previous RPA era sort of taught us that automating a bad process simply creates a faster bad process, right? So we've seen some of that. The meaningful areas, how do we enable quicker, faster underwriting? How do we enable more straight through claims where they should be and sort of predict fraud more quickly? Like the areas of our business that truly are leakages from an insurance standpoint, both in time and effort, and really sort of focus on what matters. So like in that equation of document ingestion, carriers are at different stages of that in different. So like for one to solve that and take it another 10% further might be meaningless as compared to someone who's sort of at the beginning of that journey. And it's not to say that everyone should take the same steps, right? So you sort of have to do a little bit of internal reflection on that front.
And would you say that there are still some common executive misconceptions about AI within carriers today, or do you think like people are getting up to speed?
I'm not sure it's as much about misconceptions as I would say there's still a lot of FOMO, fear of missing out, that's out there. And the number one question that I typically get asked is like, what is so-and-so doing? Right. And I still think that that's driving a lot of the investment right now because people fear that they are behind. Right. And so instead of, again, doing what we just talked about, which is really looking internally and saying, what are we doing that is tied to our most important financial metrics and sort of driving the biggest outcome to manage, and instead saying, I must bring something to market around AI so that I can market it. And look, there is a lot of value in what I just said. Like truly, like companies, you sort of started by talking about the SaaS apocalypse as it's been referred to on the street. And so many companies are moving really quickly to make an announcement around what they're doing to AI to stop, the public bleed on their stock. And that's a real effect. People have to do that. Now, what I would say is if everything you're doing is for marketing, then hopefully it's a smaller percentage of the budget than what it ultimately seems like from a public perspective, because the focus needs to be on really materially impactful efforts versus AI for the sake of AI.
I'd like to shift a little bit just in in thinking about, I guess, whether at the carrier level, it's core systems, at the broker level, where it's agency management systems. But obviously, there's a lot of well-known, brands that are out there that have been installed in many organizations for a number of years now. They've been acquisitive, bolted on additional technologies, built additional technologies, and now you have some new players who are coming to the market with completely different underlying technology that's AI native, attempting to challenge. Rip and replace has always been a big painful issue. You hear about holistic systems, you hear about land and expand, point systems, this and that and the other. How does this shake out in your mind? Like, can the core systems players that we know kind of innovate and keep up, or do they have to build a parallel system? Do the new players have a real advantage, or is it still almost impossible to get someone to rip something out in a big carrier organization? What are you seeing out there?
So it's a really interesting question, and I wish I knew all of the answers to this prediction, because I'd be, sitting next to my trading screen, and that's where I'd be putting all my time and money. But I have a perspective, right? I mean, so you listed a number of sort of core systems, whether it's brokerage, whether it's policy administration within carriers or other systems like that. These, so-called core or heartbeat systems are typically deeply, deeply integrated into what's often legacy tech stacks amongst these carriers. So the idea of like a true rip and replace in many equations for these carriers is not immediately palatable. Doesn't mean that it's not possible. Now, I'll unpack that for a second. So, if you're one of these core heartbeat systems, you're probably integrated to billing, claims, payments, all sorts of things, right? That are at differing levels of sort of modern systems and the databases that they run on. Like, so it's not just replace X system and put in another. There's a whole technology effort that goes into it. In addition to that, like, some of these systems took years to implement and years just to upgrade, right? And so the willingness and interest for people to engage on some of these topics and sort of go through this effort again, to put in a better mousetrap, where people have been sold, better mousetraps or talked about as better mousetraps for years. Now with this AI, again, it's challenging. It's not always palatable. Now, the flip side of that, I think there are solutions that are coming to market for some of what we've historically relied on from a software standpoint within the insurance industry that are going to be fundamentally better at doing what we need them to do than the tools we've used in the past. Like point stop, right? These AI native capabilities are more flexible. They just enable better outcomes. And so, like, the difference in this case is you have to be actually like a differentiating system. And it's not, I'm replacing my agency management system or my policy admin system with a better mousetrap. I'm going to change the way that I work fundamentally because of this. So in the eyes of the consumer, it's a paradigm shift between, I used to make orange juice and now I'm making lemonade. Like, it's not a better way to make orange juice in this scenario. So that's one angle, right? People have to be convinced that the process and the workflow and the way that I do business fundamentally changes and is improved versus rip and replace, as you mentioned, with system X over to system Y. Now, the next part that I'll add to this is a lot of these sort of AI native vendors have a really interesting opportunity to also disrupt the pricing models for the products that they are selling, as opposed to, the traditional incumbents in some of these spaces. So it comes as no surprise that many of these systems we're talking about are hugely expensive. They're often tied to metrics related to growth that carriers don't necessarily love in all cases, because they don't prescribe their growth necessarily to these systems. And, as we talked about in our masterclass at ITC last year, your ability to price your product often depends on sort of the ecosystem that you're selling into. If you're selling into policy administration, the market has been trained that to buy up based off of premium, a percentage of premium, that's the standard. Well, if you're an AI native solution looking to disrupt that segment, you have an opportunity to try and benefit from the pricing sort of benchmarks and baselines that these carriers have gotten used to in terms of overall dollar spend. And you can come at it from a different angle that then says, well, I'm going to price in a totally different way that is actually more beneficial to you, carrier A in this example, right? So it's first fundamentally convincing folks that you have a better mousetrap, and or at least as good as what it does today, and it's going to change the workflow. Then you can use pricing as a way to sort of further that wedge in and replace and try and replace some of these systems. I think in some cases it's going to be quick across businesses where we see some legacy systems start to move out and don't want to alienate any specific companies. And in some areas it's going to be slow and painful, right? But there's going to be a new battleground, that some of these core vendors are going to have to compete with that historically were not competitors. It's similar to years back when people said the InsureTech was going to be the death of the carrier.
Yeah.
Well, that's not really what happened, right? In many cases, we saw variations of that come to light, and the answer is somewhere in the middle, primarily more partnership on that front. And I think on this, like AI native systems replacing core legacy systems, you're going to see some areas of the insurance ecosystem where that takes on quickly, and some areas where it's just a new battleground for what was sort of the old ways of doing business.
And is there an element of this that also is trying to change the mindset of viewing these systems and everything related to them as a cost center, and instead as an ROI engine or a revenue generating, income generating engine?
Yes. And I will say in a previous life, my job in many cases was to look at solutions and figure out the business case for replacing a system with a new system. And very often we would try and go through the exercise of what you're saying, which is like, how does system X actually make us more money? Like what is the system doing? And it becomes a muddy sort of equation, because it's very rare that you have a piece of software that is actually the revenue generation engine. It's typically an enabler to underwriter or someone in sales to be able to do their job more effectively. Now, as people move to these outcome-based price models, maybe it gets a little bit easier to do what you're saying, which is, well, I'm only paying when I get the outcome, so therefore there's a predefined kind of ROI that exists. But I think in a lot of cases, it's really a stretch to say the system is the reason why we grew by 5%. Now, the system may have enabled you to reduce headcount in certain areas, and those types of benefits are pretty clear and cut and dry, but revenue production associated to applications, I think, is not always the easiest thing to solve for.
Yeah. So there's one thesis out there that's saying that, sort of services is software and software is services, and there's a convergence there. And, BPO and BPS has been a big part of this industry, offshoring. It's been a COO playbook, I think, for a long time for a lot of organizations. And I'm just curious for, that side of the industry, or the companies again with agentic models that claim, well, we're going to have all these agents that'll replace the people offshore for you. How are you seeing that aspect? Is it kind of similar issues, similar pricing considerations, or is it different?
So I think this is one area where AI very clearly is challenging just traditional sort of labor arbitrage scenarios. And so I think the historic playbook, as you called it, of pure labor arbitrage for certain services are going to be challenged without innovation to the service model that's being delivered. I think like in the case of the BPO, BPS providers that we're talking about, the future sort of belongs to the firms that combine this AI-enabled delivery or software with their domain expertise, unique work, own the accountability for the associated outcomes. If the solution is purely like, I'll take your FTEs and replace them with my lower cost FTEs, I think those are fundamentally challenged businesses. And look, like consulting is primed for the same effects, right? And we've already seen the way that our business and our offerings have started to change because clients are expecting different things now as a part of solutions. So there's examples where historically we might have finished our project by delivering a PowerPoint presentation or a defined playbook for a sales team. And now, part of our solutions involve enabling client LLMs, delivering markdown files, like things that are ingestible and implementable. Like it's the blend between strategy and execution, I think just gets more and more sort of murky. And like if you're a BPO and BPS provider, you can't just be execution anymore. You have to be a part of the unique strategizing and then the associated execution and value creation activity.
Yeah, that's interesting. The notion of delivering something that's ingestible, in thinking about that. How, like, are those things you're seeing immediately, or are those things you think are coming more, a year, 2 years, 3 years down the road?
No, they're happening now. Like that is for sure happening now. And we even see, on our end, right, that like the tide is turning in some cases and customers are expecting that in our services, like the question at contracting is coming up around, well, what are your offerings around AI? How does it look different from you versus our competitors? What are the take and leave behinds as a part of your delivery, and sort of how are we enabled better off as a part of this? So like it's an expectation shifting thing as clients, insurance carriers, brokers, agents, InsureTechs, whoever it is, start to utilize AI themselves, they're now asking the same question of their service providers and vendors of, if I'm doing it differently, you must be doing it differently as well, right? Tell me about that.
And so, as a firm that's focused on pricing, you have something that's kind of unique and proprietary, and I'm sure it's evolving. And I'm sure there's probably concerns about LLMs, finding that information one way or the other, and then bringing it to everybody else in some way. But for some of these businesses that are maybe more commoditized, I mean, is the play to be in a specialty lines niche where, they've just got unique expertise, and there's still going to need to be people, or it's going to be harder for sort of a more generic agent or a platform that's made up of agents to kind of get into something more specialized? Or are you seeing some other ways to be able to carve out a niche or protect the services business so it doesn't get totally chipped away over the next few years?
So I think as a part of that, I am seeing services businesses in particular really look internally and say, what is the offering that I have to bring to market? And essentially, if I don't already have bolt-on tech capabilities that make that sort of more unique and sticky, you're
Yep.
seeing acquisitions occur in this space and blended price models that move essentially from per labor hour into services bundled into the software or solutions that these providers have. And then like Palantir did a great job sort of training the market on this concept of like a forward deployed engineer, but that becomes some of the delivery model of this, which is I've got a software, I've got a team behind it that I can consistently sort of improve and change those workflows that we were talking about. And that really changes you from being a vendor to a partner. And that I think is critical from a services standpoint. If you're truly just a vended commodity and you don't change that, I do think that those services businesses will be, at significant risk.
So you mentioned in our last conversation that you ran a very large shopping simulation, and I'm curious, sort of, what, to the extent you can share, what the process of that was like, how it was maybe similar or different to the type of work you've done in the past, and maybe sort of what it said about some of the recommendations being made.
Yeah. So what we did was we had seen a number of sort of these new solutions being rolled out via LLMs around quoting capabilities and different things starting to pop up. And we were really interested to see like, well, how do the LLMs respond to searching behavior for insurance products, and what is the difference in results? And this is one of the challenging things about implementing AI is with most software and solutions, you need to put 1 + 1 in and get 2 every single time. Every time I search, I want to get the same response. But with AI, that's not always the way it works. With the LLMs, you get different levels of responses depending on the prompts and the questions and things that you put in. So what we essentially did was we simulated roughly 50,000 shopping experiences across 50 different consumer personas across 3 of the primary LLMs. And what we were trying to do was see, with an understanding of what, we either know or believe to be the customer segments in many cases, like would the LLM prompted with the perfect customer for Progressive or the perfect customer for Insert X carrier be the response that we got back from the LLM. And what we saw in some cases was continuity amongst 2 of the 3 LLMs, but not the 3rd LLM. And what you're sort of able to deduce in the background is some elements of like why it is triggering its responses in certain areas. And I think it's generating a really cool and interesting space in tech at the moment, which is almost like SEO part 2 right now. Like we've gotten so used to SEO, it's become a base part of marketing functions. But at one point that was like a new and novel concept. But now you've got the same thing that's going on for LLMs and marketing to the agents themselves that are then promoting the responses back to the consumer. It's sort of like a whole new frontier. I don't know what happens once everyone is somewhat optimized for this world. It's a little different than Google AdWords and who's willing to pay. But some interesting findings from the search. And I've got a carrier client who I've worked with who, if they're listening to this, will laugh. But we did some digital quoting review for them. And one of the feedback that we had at the time was like you over-explain too much in insurance lexicon to the customer. Like these are things you're explaining in HO3 and in HO5 to the average customer. They don't really know or care or need that much detail. But these were actually the reasons the LLM was choosing to recognize them and respond, because it's indexing for content, information.
Right.
And so what is optimized for an LLM is very different than traditional SEO. And
Yeah.
so I think it's going to inform technical decisions in ways that are, fundamentally different from what we've sort of taught the marketing organizations over the last decade. And it's just going to create a very sort of splintered and different experience that I think is a really cool space at the moment.
So does that suggest there's going to be like a certain set of marketing messaging for agents and then a different set of marketing messaging for people, but you've got to figure out how to keep them at least somewhat?
Yeah. And Josh, there already is. There are companies that spawned up very quickly that are sort of going after this already, focused on, they're calling it GEO versus SEO.
Yeah.
And so their companies are very focused on that. I think if you're a CMO on the other side of this equation, the question becomes well, is the LLM my primary distribution channel? Do I think of it as a lead generation mechanism? How do I want to treat that channel? What does that mean for how I change my public facing websites and the messages that I put out there? What am I optimizing for? And the thing that I think we haven't seen anyone truly do is kind of split that experience yet, where it's clearly optimized for one versus the other. I mean, today you're going to see people optimize for SEO because they've been doing it for decades, but that could be changing because we saw this as a company ourselves. Last year, roughly 1% of our traffic to our corporate website came from LLMs. This year, it was roughly 5% and increasing. And when I talk to carrier customers, I hear roughly similar facts on their end. Now, does that cap out at 10%, or do we start to see LLM become the dominant form of search? TBD.
Do you see a change coming in distribution economics, either in terms of what we were just talking about on the carrier side or the broker side, or on even for the software vendors and how they think about how they commission their people and those sort of things?
Yeah, I mean, again, I think it's early innings. I think a lot of people right now have put out quoting applications that at the moment primarily are marketing tools to drive people back towards their actual website and traditional channels to actually make these purchases. And so if you look at the LLM as sort of a low-cost way to do that, it's just a different change in sort of the customer acquisition economics through a net new channel that didn't exist a few years ago. If you take it a step back and start to think about consumer behavior, do I think that people in rural areas that are more prone to go to their local agent who they've gone to from decades is suddenly going to stop? No, I don't think so. But I do believe that that same person may, assuming they've engaged with an LLM before, might start to ask some questions there before they make their way to their local agent and show up with a more informed conversation than what they've had in the past. So I don't know. We will see. I think when this first quoting bot was put out, I went to a conference and there was a large broker there, and people were implying again, this is the death of the brokerage. And I think that's a far, far extreme. That is not the case. Brokers have existed and will continue to exist for a long time. They serve a very important part of the ecosystem. That is not just the interchange of a policy. There's a lot more there to it.
So we've kind of been all over the insurance and InsureTech kind of ecosystem, value chain, matrix, however you want to think about it. But if someone talks about a pricing model 3 years from now, 5 years from now, what does that even mean? Do you have a sense? Is it going to be different than what a pricing model is today?
So I think sort of as we started, you're going to continue to see people move towards pricing models that are more aligned to the value that the products ultimately create in different mechanisms. Like historically, a lot of software was just user-based licensing, which doesn't really like get at the value that's being derived. Ultimately, the value that's being derived in those contexts is sort of the price that is transferred. Like price is that measure of value. So you spend $10 million a year on X system, like that is the communicated value. In the future, I think you get more price models closely tied to those outcome-based price models as people start to figure out their own economics and sort of willingness to pay. And you start having a different conversation that doesn't say, well, my product is $100 per month. It's my dollar, or my product is $5 per X outcome achieved, right? And the communication of price sounds different in that measure versus today.
All right, great. Well, Mike, I think we've kind of hit the limit here, maybe even run over a minute or two. I apologize for that. But anything else you'd like to add before we wrap up?
No, Josh, this was awesome. I always appreciate you having me on your podcast. Great conversation as always, and thank you.
And if people want to track you down or learn more about the firm?
Yeah, absolutely. You can find us online at our corporate website for Simon-Kucher. You can also add me on LinkedIn, or you can find me at most of the big insurance conferences. As we did last year, we'll be hosting another masterclass on monetization, really going deep on these topics of AI, offense and defense, of pricing strategies this year at InsureTech Connect. If you are interested in attending, the session will be on Thursday in the mid-morning, and we'd love to have you there.
All right, great. Yeah, so your contact info and the company info will be in the show notes. And again, Michael Nadel, partner and head of the global insurance practice at Simon-Kucher. Thanks so much for joining me on the InsureTech Leadership Podcast.
Thanks so much.